What's up, guys? My name is Austin and you're watching Econometrics with Austin. Alright guys, so today what we're going to be talking about is home values and the reason why I think now is not the right time to buy a house. So what we're going to do is we're going to take a deep dive into Zillow data and take a look, and I'll explain to you why I think it is not the right time to buy a house. So currently you may be thinking, with the economy slowing down and the Fed's cutting interest rates to zero, that it might be a good time to buy a house. Or maybe not, because the economy's slowing down, you don't have money. But either way, you might be thinking it's a good time to buy a house. For some reason you're thinking it. Because honestly, that's what my parents want me to do. They, instead of living downtown, which is what I want to do, they'd rather me buy a house in Harbor Town, which is literally just across the river from downtown, but it's houses and not apartments, and build equity and all these things. You're wasting money renting when you could be building equity. That might be a true thing to it about building equity, but here's what I'm going to say. If you look at housing prices, so this is for Memphis, we're going to take a look at where I currently live, Memphis, and then Marion, which is a suburb of Memphis. And as you can see, look right here, market temperature, very hot. Seller's market. Seller's market means that there's less inventory. There's less supply and there's more demand, which means prices are going to increase. If you look up here, over 1 year, the price of a house in the downtown market has increased by 6.5%. And they're forecasting this year to increase by another 5%. Now that's great if you've owned this house. And if that's your house, that's great. You've made 11%, 11.5% in 2 years. But if you're buying a house after a lot of years of appreciation, then the house, this is the way I feel. I think we've been on such a bull run for 11 years, just like in the stock market, that it's about time for things to start cooling off. And that housing right now is overvalued. And the reason I think it's overvalued, for one, nobody's really building new houses because they've been so scared since the last housing crisis. Most home builders went out of business to begin with, so there's less businesses to build houses, and people are still scared. Banks are scared, the home builders are scared. Everybody's scared to take the risk. Unless the market's just crazy hot, then they'll do it. So let's take a look at this graph here. This is the average home value in downtown Memphis. That includes condos and whatnot. Take a look at 2015. The average house, now this is 5 years ago, was valued at $214,000. 2021, the value is predicted to be $300,000. And so in 6 years, they're saying that the price of a house, the exact same house, nothing's changed, will be going up by $85,000 in 6 years. Now, if you bought your house in 2015, that's great. You can sell your house for $85,000 more. You're to the positive. You can put that down on a bigger and better house. But if you're a buyer, just like with stocks, whenever you see a value going up, 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 over so many years, you don't buy it at the peak. You wait. Wait and let this thing soften out. And whenever home prices start to fall, or we go into an actual recession, not just one caused by disease, but a deep, harder recession that's going to last, then you go in and buy your house. And down here they even have the price per square foot. So 2015 is $140 a foot. Now it's up around $196 a foot. There's actually a lot of data on here. This is rent for downtown. And it's not just downtown. It includes downtown, the medical district, South Memphis, Harbor Town, and then there's nothing out here. That's all just flood plains on the river. So let's take a look at Marion. This is directly across the river from Memphis. This is a suburb in Arkansas. They don't have the little market meter, but as you can see, look, 3.6% increase over 1 year, and they're predicting another 4.7% increase. Now let's take a look at how home prices have increased here. Now, this is a steady line from 2011. This is the last recession here is home prices. Here's the bottom, 136,000. And it steady goes up, 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 up to 169. Now, homes on the Arkansas side haven't appreciated as much. There's not nearly as much stuff over here to bring value as there is downtown, of course. But still, once again, we see this is pretty much the 11-year bull run right here. And it's been getting steeper. And that's, that just looking at this, you don't want to buy a house at the top. Because whenever that graph starts to turn, if you buy a house right here, say 2021, median house for 169,000, and then this thing starts to swing back down, that's when you go upside down on your mortgage. That's when you run into problems, and that was the main thing that happened in 2008. In 2008, banks were giving out mortgages to people that couldn't afford them. They were building houses like crazy. And then the economy started to slow down. People lost their jobs. They couldn't afford the mortgage. There was so much inventory on the market that all the other houses, their prices started to decline. And then whenever you can't afford your house, you're like, oh shoot, I need to sell it. You're underneath it. You're upside down. And now when you sell the house, you still owe the bank money. And that's what most people did, short sales, foreclosures. That's why foreclosures were so high back then. Absolutely crazy. And this price per square foot down here and rent, there's not much renting over in Marion. So let's take a look at Fayetteville, college town. Now this here I don't think is really correct because of anything south of 16 right here, like Baldwin. Anything south, all this, that's the Ozark Mountains. There's literally nothing out here. It's all mountains, and if there's like little shacks and sheds and small houses and farms and stuff. There's nothing out here. But the university is right here. And this is part of a larger metro of about 550,000 people. The market here in Fayetteville is absolutely insane. Like people are coming in and buying 4 or 5 houses on a street, tearing them down and building 15 row houses all over the place. It's absolutely crazy how they're densifying it. But see, this says it's warm, and I think that's either because of all the new houses they're building or because all this mess out here that's not worth anything is included in it. Because, you can't get a house anywhere close to the university, this area of Fayetteville, for this price. But anyway, so as you can see here, once again, value's up 4.2% in this past year, predicting 5.1% increase. And once again, look at this chart. Here's the bottom in 2012 for 149,000. They're predicting 2021, 242. That's almost a $100,000 increase in value over 9 years. And like I said, if you bought your house here, that's great. But if you buy your house here, that's not good. Because this house has gained $100,000 in value over 9 years. Now, if you take a standard inflation rate of 2%, multiply that by 9, you should have an 18% increase if it's just standard inflation. But no, you have a $100,000 increase on $150,000 home. What was that? That's 75%? If I do the math right, maybe not 75, somewhere around there. I don't know. I'm trying to do math in my head, it's not working. But it's in crazy amounts of appreciation in these houses. And what I'm thinking, it might not be for another year, 2, 3 years, but whenever this graph, this chart turns and starts heading south, it's going to head south hard. And you do not want to be upside down. It's better to wait. It might cost more to rent and you might not be building equity, but you'll be better off in the long run if you can, you're not going to be able to pick a bottom in the housing market. It's just like stocks. You can't pick a bottom. But whenever you see the value starting to turn down, and these resources like Zillow are really useful, when you see it start to turn down, that's whenever you should kind of start looking and watching and seeing what the markets are doing to find out when it is a good time to buy a house. But anyways, guys, that's what I was going to talk about. Just get in here real quick to get a video done for next Friday. So that's what I'm thinking on buying a house. Now, if you're going to buy a house like this and set it up for rental, that's completely different because you're making money off of it. That's okay because rental rates usually don't change just a whole lot. Unless you get lots of vacancy, then they do. As long as you have enough money whenever you're buying a rental, you've got enough profit on top to cushion yourself in case there is a decrease in rental rates in your area, then you should be okay. But if you're buying it for yourself and you're paying the mortgage completely by yourself, I think the best thing to do is to wait out the housing market because it's hot. The housing market is hot. Pretty much anywhere in any city in the U.S., the market is hot right now, and home prices are going up like crazy. You can see it, in Memphis, just like this graph here shows. There were condos downtown, 2015, that sold about this price, $200,000, and they're the penthouse condos that are now, they're selling for $800,000, $900,000, $1 million. Of course, they're penthouses, so they're big. But it's like, I wish I would have bought it back then, at the bottom. But anyways, so that's what I got to say about real estate, the housing market. I think, it's too hot to get into unless you're just not worried about getting under on the loan turn upside down on you. But anyways, guys, that's the video for today. Thanks for watching. Be sure to like and subscribe. If you want to see more videos like this, let me know in the comments below. But thanks for watching. I'll see you guys in the next video.